The SEI token just flashed a buy signal that historically preceded major moves. But before you start celebrating, the technical indicators are screaming something completely different. We're looking at a perfect storm of conflicting signals that could either launch SEI to new highs or send it crashing down. And the answer might shock you. Welcome back to the channel, Crypto Warriors. If you're not subscribed yet, hit that subscribe button and ring the notification bell because we're diving deep into market analysis that could save your portfolio. Today, we're dissecting SEI token's latest price action, and trust me, this analysis is going to challenge everything you think you know about this altcoin. SEI has been playing psychological warfare with investors all year. One day it's showing strength, the next day it's bleeding red candles faster than a DeFi rug pull. This schizophrenic price action has created what I call the SEI dilemma, and it's exactly the kind of setup that separates profitable traders from emotional bag holders. But here's where things get really interesting. According to crypto analyst Ali, who's been tracking SEI's technical patterns with laser precision, we're staring at a potential inflection point that could determine the token's trajectory for months to come. Right now, SEI is sitting at a crossroads that's making even seasoned traders scratch their heads. The token has been forming a triangle pattern, that classic consolidation structure that either explodes upward or implodes spectacularly. No middle ground in crypto, right? Since July, SEI has been printing lower highs like a broken printer, which is about as bearish as finding out your favorite DeFi protocol got hacked. This downward staircase pattern has bears salivating and bulls questioning their life choices. But wait, there's more to this story. The token just rebounded from the bottom of its triangle formation, showing signs of life that have some traders reaching for their FOMO buttons. This bounce isn't just random market noise, it's a technical signal that could fuel a 10% move toward the triangle's upper boundary. But here's where the plot thickens. While the chart structure is whispering sweet bullish nothings, the underlying technical indicators are singing a completely different tune. It's like watching a romantic comedy where the music is death metal. Something doesn't add up. According to Ali's analysis on X, SEI just triggered a buy signal on the TD Sequential indicator at the monthly open. For those unfamiliar with TD Sequential, it's a momentum-based indicator that's helped traders time some of the most explosive crypto moves in history. The last time this signal fired for SEI, the token peaked shortly after, but that's exactly what makes this situation so intriguing. Now, I've been analyzing crypto markets for years, and TD sequential signals are like finding a four-leaf clover, rare and potentially lucky, but not guaranteed to make you rich. The key insight here isn't just that the signal appeared, but the timing and context surrounding it. Let me break down what the SEI price chart is actually telling us, because this is where technical analysis becomes an art form. The triangle pattern SEI is trading within represents a battle between bulls and bears reaching its climax. Think of it as a pressure cooker. The longer the consolidation, the more explosive the eventual breakout. The rebound from the triangle's lower boundary suggests buyers are stepping in at support levels, which is encouraging for short-term price action. My analysis indicates this bounce could indeed push SEI toward the triangle's upper resistance, representing approximately 10% upside potential from current levels. However, and this is a massive however, those lower highs since July are screaming caution. In technical analysis, we have a saying, the trend is your friend until the end. Right now, the intermediate trend is definitively bearish, and no amount of wishful thinking changes that reality. But here's where it gets absolutely wild. The technical indicators from investing.com are painting a picture darker than a bear market in December. Let me walk you through these numbers, because they're telling us something crucial about SEI's internal momentum. The RSI sits at 43.507, which puts SEI in neutral to bearish territory. This isn't oversold enough to signal a major reversal, but it's weak enough to suggest sellers remain in control. When I see RSI at these levels during a triangle formation, it typically indicates the breakout direction will favor the bears. The stochastic oscillator at 44.302 confirms this bearish bias. Stochastic measures momentum, and these readings suggest bullish pressure isn't building the way it should before a legitimate upside breakout. It's like watching a rocket with half its fuel. It might lift off, but it's not reaching the moon. MACD is sitting at -0.002, which is practically flat, but slightly bearish. This indicator measures the relationship between two moving averages, and when it's hovering near zero during consolidation, it often precedes significant moves in either direction. The slight negative reading tilts the probability toward bearish resolution. The highs-lows indicator at -0.0192 suggests SEI is gravitating toward its lower trading range, which aligns with our bearish technical picture. This indicator helps identify whether price is finding support or resistance, and these readings indicate resistance is winning. Ultimate oscillator at 48.297 shows momentum lacking the strength needed for sustained upward movement. This oscillator combines multiple time frames, and readings below 50 during triangle formations often precede downside breaks. Finally, the rate of change indicator at -4.88% confirms that downward movement still dominates the token's recent price action. ROC measures the speed of price changes, and negative readings during consolidation patterns typically favor bearish outcomes. When I aggregate all these indicators, they're collectively screaming strong sell. And that's not market manipulation or FUD, that's cold, hard, technical analysis. Now here's my expert take on this entire setup. And this is where experience separates successful traders from the crowd. We're looking at a classic divergence between price structure and momentum indicators. The chart pattern suggests potential upside, but the underlying momentum is deteriorating. In my analysis, this creates what I call a false hope setup, where retail traders see the triangle bounce and start buying, only to get trapped when the pattern resolves to the downside. It's a cruel but common occurrence in crypto markets. However, I'm not completely bearish on SEI's immediate prospects. That TD Sequential signal Ali identified does carry weight, especially at monthly time frames. If SEI can generate enough buying pressure to break above the triangle's upper boundary and reclaim those previous highs, we could see a momentum shift that invalidates the bearish technical picture. The key level to watch is the triangle's upper resistance. A decisive break above this level, especially on increasing volume, would signal that bulls are regaining control and could spark the kind of explosive move that makes crypto traders' dreams come true. But until that happens, the smart money approach is maintaining cautious optimism while respecting the bearish undertones. This isn't about being right or wrong. It's about managing risk while positioning for opportunity. So what's the bottom line on SEI token? We're witnessing a fascinating battle between technical structure and momentum indicators. The triangle pattern and TD sequential signal offer hope for short-term upside, potentially delivering that 10% bounce toward upper resistance. But those deteriorating momentum indicators and persistent lower highs since July remind us that the bigger picture remains challenging for SEI bulls. This token is at a make-or-break moment where the next few trading sessions could determine its trajectory for months. My recommendation? Watch that triangle resistance like a hawk. A clean breakout above previous highs could signal the beginning of SEI's next major leg up. But if the token fails at resistance and breaks below triangle support, we could see significant downside that catches over-leveraged longs completely off guard. Remember, successful crypto trading isn't about being right all the time. It's about managing risk and positioning size according to probability. Right now, SEI offers both opportunity and danger in equal measure. If you found this analysis valuable, smash that like button and let me know in the comments whether you think SEI breaks higher or lower from this triangle. As always, this is not financial advice. Cryptocurrency trading involves substantial risk of loss and is not suitable for all investors. Never invest more than you can afford to lose, and always do your own research before making any investment decisions. The crypto markets are highly volatile and unpredictable, and past performance doesn't guarantee future results.